Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to cover the concept of advanced velocity banking. So, if you've seen any of the other velocity banking videos on the internet, they always talk about paying off your debts quickly, paying off your home in 5 to 7 years. And we're going to go one step further, and we're going to talk more about the concepts than the numbers themselves. Here, we're going to kind of quickly shoot through the numbers. But if you want a deeper understanding about the numbers when it comes to velocity banking, go ahead and click the link down below in the description box of our videos that say for Velocity Banking 101, 102, and you'll get to see the numbers in action. Now, what is the difference between, quote, advanced velocity banking versus, quote, normal velocity banking? The term advanced isn't so much advanced as that it's just kind of like a level up to what you would normally do when you engage in velocity banking. So if you pay off your house in 5 to 7 years, and that's an amazing accomplishment because nobody ever does that. Most people don't pay off a 30-year mortgage in 30 years. What happens? So even though it's an amazing accomplishment, all you've done is just you have just one less debt than you did before, right? And so what we want to do is just kind of take it to the next level where instead of just having less debt, every paid off debt that's tied to an asset will essentially increase your income rather than decreasing your debt, right? Okay. So basically, the only thing that we have to consider is that we're doing this in regards to a wealth creation mindset. And so let's say that you have a rental house. Here in Georgia, I have a rental house here that has a $190,000 loan at 8%, and the loan was originated this year. It's about 1,400 a month. And based on my current personal situation, if I combine the tenant's monthly payment and all the other income sources that I have, and let's say that the living expenses is about $2,000 a month, then according to this calculator, I'll pay this off in about 3 years, right? And so within three after 3 years, you have much more cash flow than you would normally with debt. In fact, with a lot of rental real estate, most of it doesn't cash flow, or at the best, you might get like a couple $100 of cash flow with debt. But if you don't have debt, then the amount of cash flow that you get is much greater, and it's in your best interest to pay it off. One, because if you don't pay it off quickly, especially with an investment loan, because the interest rates are normally higher, the amount of interest that you would pay over the 30-year loan would be much greater. But if you pay it off, um, you would pay a much less interest, and you would get to experience the fruits of your additional cash flow. So here, let's say we paid this off in about 3 years, so it's $190,000. And I understand that people don't have all these other income sources to help pay off the loan, but this would be the ideal situation because if you don't are relying solely on the rental income to pay off the loan, then it might take, as long as probably 12 years or something like that. Okay. So let's just kind of do a quick overview of what would happen. So house one would be paid off in 3 years, right? And you get an extra, we'll say $2,000 of cash flow. So $2,000 of cash flow, 3 years. And then once house one is paid off, then we would try to get another house. And you might say, hey, $190,000 seems kind of low for Metro Atlanta or Georgia these days. How would you get a $190,000 house? And that's because that when we try to buy houses, we try to buy them at a discount. So that's one of the things that we try to emphasize when it comes to real estate. We don't buy real estate at full retail value. In order for us to easily generate wealth without trying, what we have to do is try to get it at a discount. And we're going to talk about this more in detail in other videos about buying assets at a discount. All right. So we have one paid off house in 3 years. We get an extra $2,000 a month. And so what's going to happen is we're just going to add that to our monthly income. So during the 3 years, let's say that we have zero cash flow on our rental property, but now that the debt's been paid off, let's just say we add another $2,000 to our monthly income. Now I'm just estimating this just for the sake of the demonstration. Obviously, we didn't take into account like other, expenses like taxes and other things, so it might not be totally correct, but you get the idea. All right. So the next house is going to be paid off in about 2.3 years, right? So house two, it'd be 2.3 years. And we'll just say that we have another $2,000 cash flowing asset. Again, there's a bunch of variable things. I don't know how much the house will actually cash flow, but just, work with these numbers with me. Now, you have two income producing assets at $4,000. Now, I know $4,000 is pretty decent income without having to do anything, just as long as you have a tenant in there. But you probably need maybe one or two more houses to feel comfortable and not have any issues. So let's just add $10,000. I'm sorry, $2,000 to our income. And so what happens again, if we have the second paid off house, then we have $12,000 in income. Shoot, it's pretty good. And then as you can see, it'll take us about 1.8 years to have three cash flowing assets that would give you a passive income of $6,000 a month. And if you were ever to sell your properties, so this isn't a $190,000 house, this is a $190,000 loan, and these houses would probably be around 300,000 at the bare minimum. So if you multiply 300,000 times 3, that would be $900,000 of equity. And essentially, if you didn't want to be in the rental property business anymore, so you have two options. You could just keep receiving passive income for the rest of your life, $6,000 a month after you get house three paid off, or you could just sell them off and get $900,000 of equity. But let's just do a quick calculation of how long it would take for us to get those three houses. So 3 plus 2.3 plus 1.8. So it'd be about 7 years. So I know in velocity banking, people talk about how to pay off your own personal home in 7 years. But if you have many sources of income and you're an entrepreneur and you have not only do you have your businesses, but you also have rental portfolios, then you can get additional sources of cash flow with this wealth creation mindset, right? So this is kind of my plan, or I think it is. I don't know. I'm kind of debating whether I should go with this or maybe another massive cash flow strategy for now. But right now, I'm at my stage. I'm at house one, and I should be able to pay off house one in about 3 years or so. Okay. All right. So this is Korean Atlanta Mentorship. If you have any questions, feel free to leave them in the comment box below. If you're interested in mentorship, feel free to copy and paste the Google form link below into a new tab, or you could email us by going to the About section in our YouTube channel and say, hey, I'm interested in being mentored by y'all. All right. Have a great day, and we will speak soon.